Welcome back to another one, guys. Kalisa here. Let's talk about why I think the daily time frame is the most important time frame you need to pay attention to. Let's get on the charts and see. The reason why I think the daily is the most important is because most big money movers, the banks, the institutions, all of them will look at the daily time frame. But you're not likely to find all of them looking at the 5-minute or the 1-minute chart. And yes, they might do for an instant spike in volume, for example, at a particular time, but every day they will all look at the daily time frame. The daily time frame also gives you a good idea on what's going to happen the next day, okay? Especially when you're near key areas. So just jumping straight into it, on the US 30 chart, we're at a key level here on the weekly. We've had multiple areas of rejection at this level. 1, 2, 3, 4, 5, 6. So you can see it's a strong level. Also, just note that we're in a downtrend. This is a downtrend. This is a retracement. So in a retracement, what do we wait for? We wait for the continuation leg after the retracement. So we're waiting for this part of the move. And until we break above this high, we will continue to be bearish. So even if we play around here all the time, we play around here for a while, even if we wick up and wick back down and close back below this resistance level, we're still bearish. Price would need to close above and then continue in the bullish structure for us to be bullish. Okay, so the reason again the daily is important is because many of the institutions are looking at this level. As of yesterday, Friday, we had another rejection of this level. We had this minor bounce, had a retracement. Now we ended the daily with a rejection. Yes, the candle was still bullish. So yes, the candle was still dominated by buyers. However, given that we've got a long wick rejection at this level, we're going to wait and see what next week holds, because we're probably going to have some consolidation in that area. It's definitely possible for us to not have another small rejection, a little retracement, and then we break through and continue bullish. That's also very possible. However, we don't trade what we think, we trade what we see. So we've had this rejection. We're going to see what Monday, Tuesday, Wednesday holds, how the daily candles unfold. Going down to the lower time frame, you'll see that we've had a 4-hour rejection candle as well. It's not the biggest, it's not a bearish engulfing, it's not something to shout home about, but a rejection in this area is again something to just pay attention to. We'll need to break a low to confirm that we're in bearish territory again, but we just need to keep an eye on that. But usually I do top down analysis, so let's start on the weekly. So we've been on the weekly time frame and waiting for this bounce for a while, or waiting for this move for a while. We've had the bullish trend. We've had the break of this support level and it's become bearish, and now we're having the retracement. I've been waiting for this move for a few weeks. As if any of you are my common subscribers, you'll see that we've been talking about this move for a while. We've been waiting for price to reach this level here, this resistance level. We stop at this level here, hopefully create some bearish momentum so we can then roll back over to the lows. Again, we don't marry the bias, because it's possible that yes, price could actually continue back up and just continue the bullish trend in its fashion. As you can see, that was usually bullish. So delete that quickly. That was usually bullish. So there's nothing to say that it wouldn't continue up, but let's just keep an eye on price action and let's keep an eye on fundamentals as well. So this is where we are. We still haven't technically clearly broken above this level. So we've just created a bull candle inside this level. Until we break above and continue, that's when we know we're bullish. Long term back up to all-time high, should I say. It's very possible that we could have next week a weekly bear candle, which would just look something like this. It could be a rejection, an engulfing candle to continue us down. It could be a small inside bar, followed by the following week being a bear candle. So all you have to do is just keep paying attention to price action. That's the weekly. Daily, we covered. We've had this push up again, and this rejection. As I've tidied this level up now, it looks like we're floating above, but again, this is the high. This is the high that led us into this downtrend. So you can see this is one leg, second leg, and third leg. Yep. So this is the high. This area here is the high. So this, even though it's above this weekly level, we can still spike above a little bit, and we can still hold that level and then retrace all the way back down. I'll show you this example back on the weekly where this has happened before. Somewhere like here. So you can see that this is a high, this is a rejection level. We broke above, came back down, and continued back bearish. We held the lows and then continued back and then it continued back up to the upside. Just because one candle has broken through, it doesn't necessarily mean that the trend is done now and we're going to see, you shouldn't just start placing buy trades right now. Also, the reason why it's not a good idea to start placing buy trades is because you're at the price where prices, you're at the place where price is really high. Price is extremely high here. This is where all the retail trades have been getting as well. It's too late. This trend started from all the way down here at 38,153 and it's carried on all the way up here to 42s. So this is a very high price. You've also got resistance in your face and we're in a bearish trend. So I'd be looking for something like this. Price will have to break above, give us a retracement, corrective price movement, and then we continue back up and we'll take it from a lower price, discount, demand, and we buy it all the way back up. So that's my simple outlook. All I'm waiting for is to see what Monday and Tuesday hold for the candles in this area. I'm looking for price to break this low, and then we can carry on back down, hopefully. Simple. Just paying attention to daily time frames. Sometimes it's best to just sit on your hands and wait for the market to give you the flow of the market, let you know how it's moving. If you're not sure, stay out of the trades. If you're not sure, stay out of the trades. Sit on your hands. You're better off protecting your capital than placing the trade and losing funds. So just keep that in mind, guys. So we've been talking about this in the free Telegram group. I post daily updates in the free Telegram group. So click the link below, join the free Telegram group. Daily updates, daily explanations of what's happening. And you might miss some of the trades if you're not in there. So jump in there and I'll see you next week, guys. Stay strong.